Okay, well, welcome and thank you for joining this session on tropical forest investments, managing risks and maximizing social, climatic and monetary returns. My name is Marco Boscolo and I will be moderating this session. I am a forest economist and I have been working in the forestry division of the Food and Agriculture Organization, which is a specialized UN agency for the last 14 years, mostly in headquarters. And in FAO, our work focuses on developing countries. And in the forestry division, we work on the role of forests to address challenges like poverty, inequality, rural development, and of course, climate change and biodiversity loss. My specific area of work is on facilitating access to finance and investments by producers and their organizations. And we support organizations, for example, in the development of bankable business plans. We also work with governments in designing policies and instruments that are conducive to long-term and inclusive growth. We do this with many partners, for example, through the initiative that some of you might know called the Sustainable Wood for a Sustainable World. All of this to say, I am very happy to be moderating a session focusing on tropical forest investments. And I'm joined today by a distinguished panel of experts, Paul Chatterton, who is with the Landscape Finance Lab, Paulina Halonen of Finnfund, Walter Vergara of the World Resources Institute, and Alex Buskey of Flow Carbon. And I'm going to ask each panelist to briefly introduce themselves and what they do. Paul, can we start with you?
Certainly, Marco. Hello, everyone. It's an absolute delight to be here at another one of these conferences. They really are very good exchanges. So I lead the Landscape Finance Lab, which is a spin-off from the conservation organization WWF. We launched out just a couple of months ago. I'm an Australian living in Austria, and the lab has a focus on incubating and getting finance into sustainable landscapes. We focus on landscapes that are 1 million hectares above. We look to get $100 million worth of investment into each of them and secure carbon and forests. Prior to doing this, I led jurisdictional RED for WWF. So we helped design 2 of the largest forest and carbon programs in the world, Mayandombe in DRC and East Kalimantan in Indonesia, both of them covering the area of about equivalent to Greece. Very proud of that and a lot of lessons that we can go into. But that's quite enough from me, Marco. I'll hand back to you.
Okay. Thank you, Paul. Paulina, you want to go next?
So good afternoon and good morning to everyone. My name is Paulina Halonen. I'm investment manager at Finnfund, Finland's development finance institution. Sustainable forestry is one of our key sectors. And we actually have invested over 20% of our current folio into forestry assets. The assets are mainly in Africa, but also in Latin America and Asia. Majority of these are in plantations and in different processing facilities. And we see that also the plantations have a very significant role when we are trying to reduce the pressure on natural forests. Thank you, Marco.
Okay, thank you. Walter, do you want to go next?
Good morning, everybody. Thank you, Marco. Thank you to the organizers of FICE. I think this is a terrific initiative that you guys are pulling off, and I'm very happy to be part of it. My name is Walter Vergara. I am a senior fellow at WRI. I'm the director of Initiative 20 by 20. I'll tell you a little bit more about it when the discussion starts. Prior to being 2020, I was the division chief for climate at the Inter-American Development Bank. and the manager of the Climate Expert Group at the World Bank. Thank you, Marco, again for the invitation. Very pleased to be here with you guys.
Thank you, Walter. Alex, you want to introduce yourself?
Yes, same here. Thank you to everyone for coordinating this. I know these events are, especially the virtual ones, can be harder than they seem to coordinate and make happen. So thanks for that. Pleasure to be here. Yes, so my name is Alex Buskey and I'm with Flow Carbon. And we are creating a marketplace that values high impact nature-based projects. And what I mean by that is we are at the moment directly client facing, so creating demand through corporates for buying assets. Specifically, my job is to filter for the high impact projects, ones that are relevant to this discussion, and mostly in the tropics. And yeah, excited to be here and talk more about what we're up to later on in the discussion.
Thank you all. So let me just start. I wanted to share, I mean, we know COP26 just concluded a few days ago. And we all heard many of the impressive pledges and commitments. We have more than 100 countries that sign a declaration to halt deforestation by 2030. This, as everybody knows, is a very serious issue, especially in the tropics. We have countries and the private sector that have pledged or announced to have mobilized close to $20 billion for forests. And many ask the question, to what degree these pledges will actually translate in investments on the ground? And this question, to a large degree, depends on the topic of this session, how we're going to manage risks in tropical forest investments and how we're going to maximize social, climatic, and monetary returns. So with our panelists, I would like to start off with the discussion with this question. From your experience, the experience you just shared in your introduction, what could you share that you learned in terms of managing risks, de-risking forest investments? In your views, what seems to work? So, Pauliina, can I invite you to start us off?
Yeah, I'm not going to be speaking on behalf of a DFI and also from the more commercial perspective. And what I've noticed is that, well, first of all, financier needs to fully understand the risks of the forest investments. That's basically what you need to know before you can start de-risking. We luckily have very experienced forestry team, including the environmental social advisors as well as the development impact advisors, and we are able to do very thorough due diligence, which I find to be very important before we are investing. And basically, we're able to select suitable partners who we are going to be working with, and we fully understand the structures in place and basically the markets of the of where they the environments where they are active. But quite often we also see that the commercial investors also can rely on the work what we are doing, especially on environmental social side. But then on the other hand, when we talk about the emerging markets, then the commercial risks and the risks related to returns do exist. And those might be a bit more challenging to solve and basically to find the right return risk rate. Therefore, this is a little bit sort of this is a very interesting question. At the same time, we all have realized that the climate change is the reality, and basically there's the biodiversity losses, and at the same time, as you mentioned, there's a lot of money promised to forestry sector, but how this is going to be done, as we at the same time know that these things actually increase basically the climate change increases the risks related to returns and the commercial part of the projects. And sometimes investors would be willing to take the positions of senior lenders, for example, and that would be sort of a risk level what they would be able to take. But then on the other hand, we do have to understand that, for example, in Africa, we need substantial amounts of equity into these greenfield projects or expansion projects, or even in the conservation and biodiversity projects, because those are very long-term projects, and therefore there's a sort of a demand and supply mismatch. And what we think is that basically we need different type of funding, and one solution is the blended financing. And we have earlier seen more layered funding, the first loss instruments, which is one solution to de-risk projects. And then also now we're seeing more and more unfunded guarantees. So it basically could be, for example, provided by EU or sort of a potentially CEDA. They are active on the guarantee side, not necessarily yet on the forestry, but we hope to see them there as well. So basically, this type of organizations and different government schemes are important parties when we talk about the blended finance. Then of course, it's also about the structures, not only having these bodies on board, but then we need to have right kind of models. On the debt side, it is a bit more easier, but these long tenors bring the complexity into picture, in a sense that on the equity side, it is a bit more trickier. Basically, what triggers the guarantee in case of equity. So therefore, it is extremely important that all of the parties understand the forestry sector and basically have contractual agreements fully in place.
Okay, thank you, Paulina. You covered a lot of ground here, giving us a lot of tips. Thank you very much. Alex, can you share your experience with the flow carbon?
Yeah, so I think that it's obvious that what got us here is that climate change that we're experiencing now is the ultimate risk, and by not making these projects happen, that's a risk in itself that's greater. And so it's really important that we get this right now. So I know Paul will be touching on this later, but I think that it's really important that we support, and in my work, I'm looking for this, supporting projects that I guess are more in the context of a landscape, and Paul will be going more into detail of this, because I think that that's what got us here in the first place, and so it's necessary now that we think more holistically about these places and their permanence. And I think that supporting methodologies that are going to be more strictly enforcing that kind of practice, things like the impacts of on hydrology and social impacts, and making sure that the local communities on the ground have the necessary incentives long-term, aside from carbon revenue, they'll make this moment last beyond a carbon project's lifetime. So The ways that we do that now are very subjective, and we're working on ways to make that more objective through assessment tools. Right now, it's just a lot of, as Pauliina touched on, due diligence and talking to project proponents and developers and having important partnerships with developers and scientists on the ground. So being thoughtful in who we choose to work with, and making sure that we're all on the same page and thinking that these projects need to be thought of more holistically. As far as the, so that's the risk on the ground, which at the moment, like I said, is very, it's in a slightly subjective assessment of that risk. And we try to decrease that as much as possible, basically through due diligence and partnerships. But we also are, we're at a moment now where we're also starting to think about different forms of finance for these projects. And as Pauliina touched on, blended finance and different forms than our traditional. And one of the ways we're going to be doing that going forward is through decentralized finance for projects. So right now, I think that the topic of equity in a project is something that's important for us, not only for us as project proponents or developers, but also for the folks on the ground. And I think through decentralized finance, there's a way for us to more evenly spread the equity in these projects, and therefore bring that holistic vision of how we get this right now, how we de-risk this as much as possible and account for all the risk that we didn't account for in the past. These are some ways that we're going to be able to do that. So yeah, I'll let somebody else take over from here.
Okay, thank you. Thank you. I'm going to pass the mic to Paul in a second, but I see that some folks have already started to ask some questions, and I please encourage you to continue asking questions. We'll try to address them to the extent possible in this session. Paul, off to you.
Yeah, dealing with risk, well, biodiversity and social license. I started my career, so conservationists are perhaps one of the risks you have to deal with. I started my career sitting 30 meters up a eucalypt tree in Tasmania in front of the bulldozers to stop a crazy program that was going to destroy a very large area of biodiversity. Now, thankfully, we've got to a point where you don't have those sort of oppositional confrontations very much anymore. And in fact, I found myself a few years later helping to build the FSC framework for Papua New Guinea to give license to smart forestry across that country. So I think there's a couple of lessons that came to me out of that whole process. One is that forestry operations, plantations particularly, have their place, but they have a very specific place, and we have to know how they fit into nature. They have to be following very clear and the strongest possible guidelines, and FSC is a very good framework. There's some tremendous work done by New Generation Plantations, which is a platform for some of the best forestry initiatives across the planet. And I think they represent 60% of the world's FSC timber trade. There's a decade of learning that's gone on and how to do forestry well within a landscape context with good social license and with protections for biodiversity. And I think when you're thinking investment, don't just think trees. Think nature, protecting nature around those trees and protecting natural forests first, if you can, regenerating natural forests, and then production. And all of those are possible together if you take a larger framework. If you're just looking at a single concession, it's a bit tougher. But when you join together and think about a wider framework, it's much easier. And that's what we found when we were designing these carbon investment programs, both in Democratic Republic of Congo and Indonesia. These were very large areas, very large finance, 100 million, long term. But what it allowed us to do was to think about solutions that would work for all players in the landscape. And WWF had been fighting against a number of forestry operators for years. In fact, within a year, or 2 years, we were sitting together agreeing which concessions wouldn't go forward, which ones would get carbon finance, and which would transition to reduced impact loggings, and also creating new business opportunities for the forestry industry in helping communities to restore savannas and plantations in the right place. So, and then of course there's the question of finance, how to keep that all going. Well, carbon finance was a good one then, it's becoming a much better one now. But keeping a flow of finance, getting the right finance at the right time to be able to build these systems and to create the opportunities. I think one of the big problems we have ahead of us is to make it simple. And probably conservationists are the biggest problem here. It takes, you ask 10 conservationists, what's the definition of biodiversity, and you'll get 10 answers. But I think that will be changing in the next year or two with some really remarkable work that's coming down the pipeline from IUCN and Gold Standard on biodiversity metrics that will make it much simpler for the rest of us. But let me stop there and hand back to you, Marco.
Okay, thank you, Paul, for covering so much ground with this. So, Walter, you mentioned the Initiative 2020 and other things. In your experience, what works in de-risking forest investments in the tropics?
Right. Well, I want to follow on Paul's latest remarks, which I completely agree with. And let me make 3 points. The first one is a context point. 2020 was launched in 2014 with the proposition that private capital could be brought to bear on the land degradation issue in Latin America and change its dynamics. So when it was launched, the countries envisioned a series of activities around the principle that with the right policies, the right institutions, and the right incentives, you could bring private capital to invest in sustainable land use, which includes forestry, but also landscape management, forestry conservation and reforestation, landscape management, grassland restoration, and low carbon agriculture. And it worked. It worked. We have now 29 investors in 20 by 20 that have dedicated $3.1 billion to this proposition. And the base of it is that they are not seeking only financial returns. Financial returns is just one part of the total return. They also seek social and environmental returns. And when you put them all together, we have capital that flow under that framework. And we're seeking a financial return, of course, but we're seeking also an environmental, including climate and biodiversity, and a social return, welfare of rural populations. If you look at it under those 3 lenses, you have a dedicated pool of capital as proven by 20 by 20 that can invest there. When I say it works, we have 135 investments on 22.6 million hectares working under this principle. Now, we can go in detail into incentives, maybe a bit later, but much more needs to be done. As Alex said, the climate challenge does not wait. In Latin America, we're facing the climate challenge with 58% of the emissions associated to land use. This is contrary to Europe, to Asia, to North America. In Latin America, the climate challenge key driver is land use. Second, we have a biodiversity crisis. The WWF report pointed out that 51% of our recent biodiversity loss is tied to land use change. And third, we have a food supply crisis, as our friends from FAO, Marco, would attest to it. Latin America is increasingly being requested to increase food output to meet the total global demand for food and fiber, and now accounts for 13% of the global food and fiber trade, with only 8% of the population. Clearly, we need an answer to that, and that's sustainable land use. The last thing I want to say, remember the context of the 3 returns. We need to keep all the primary forests in place. There is no moral argument to cut one more tree in primary forests. We need to bring incentives that make that possible. Better governance, carbon concessions, the REDD+ structure, the use of native species in Latin America to reforest. We have 56,000 vascular plants in the neotropics. There cannot be, in my mind, an argument to work with exotics in reforestation efforts. I'll stop there. We can go deeper later, but I think this opens the discussion around what 2020 has been working in terms of driving the right incentives, the 3 returns for work on land.
Thank you very much, Walter. I'm glad that you brought this importance of needing to, well, you and Paul, to talk about landscapes and look at land use more generally. And also the point you make about the importance to protect our primary forest. And besides the things you mentioned, strengthening governance, conservation, concession, I would also like to add here the importance of indigenous people and local community. Of course, many recent studies have shown actually that the areas under their control experience much lower deforestation than other areas. I wanted to follow up,
including a WRI report that says that indigenous people do the best protecting land.
Many of you have emphasized the importance of seeking to combine returns, but also social and environmental returns. And as I was listening to you, of course, I was reminded of the World Economic Forum, the Global Risk Report that lists climate and biodiversity loss as key areas which are both very likely and also very impactful in the way businesses and investments will perform in the future. So in terms of your experience, in your review, what seems to work to maximize the social, climate, biodiversity, and monetary returns? And I want to link this also to some questions that we got, because the questions were about the importance of sustainability standards and the role that they can play that can help us better manage the risk of these forest investments by ensuring compliance with these ESG criteria. Who would like to, maybe I can ask you, Walter, to start us off with this question? How to maximize this environmental and social and the importance of standards?
Well, I'll focus on the importance of standards. Clearly, we have a global challenge, and it will not help if each one of us runs into a different set of rules to work out the problem. Right now, we have a series of voluntary standards which are working well. I would say, at least for Latin America, we have the BCS, which is working well. We have other markets through the European Union that are providing providing incentives to do it. But as we move forward, it's very important that we all follow a common agreement. Now, the UNFCCC is doing its most to advance that agreement. It has been a very difficult road, and I'm highly critical of some of the complicated architecture that is emerging, but I don't see a way around it. We all need to abide to the same rules so that we can maximize the benefits on the ground. So I'm all for voluntary standards in the interim process. I think and I hope that there will be an architecture that will establish at least a common denominator so we can continue. The flow of capital under 2020 has been remarkable, which shows that risk capital is not the issue. The issue is to have the right framework to capture that capital. We also need the risking mechanism. We've tried some through a grant provided by Jeff, but all that work requires clear rules of the game, a level playing field.
Thank you, Walter. I'm very happy to hear. It's the first time I hear that risk has not been a constraining factor when you have a proper framework and proper mechanisms.
Risk capital.
It's
flowing. It's flowing in 2020 if you have the right framework for it.
Oh, would you like to add to this?
Well, I was saying we have 29 impact investors that work with the 3 returns. And they are some more than others, but they are all very keen to maximize the 3 returns. So this capital doesn't look only to the financial bottom line, but also to the climate bottom line and the social bottom line, like you said, benefits for indigenous peoples. So risk capital is flowing. What makes that flow is the right framework of institutions, of governance, of policies, and incentives. And for incentives, critical that we have real clear rules of the game. We have used the risking mechanism supported by Jeff, which provides diminishing risk perception at the beginning of the cycle. So if there is an investment that fails, at least the first losses are covered, and that helps. But that's not the only part. No, we need other elements that play in reducing the risk, and that's the architecture for carbon income, that is involvement of the community. All those factors play in. The point that I was making is that risk capital has not been a constraint.
Okay, excellent. Anyone else would like to tackle on these questions? The importance of how do we maximize? Paul, please go ahead.
Yeah, perhaps I can jump in and Walter, we actually added another return, which is inspiration. These investments have to be owned locally, and the returns need to come back to the communities and to the other stakeholders in the landscape. And so as we build these instruments, we want to create opportunities for investors, but we also want to create opportunities to share that wealth and make sure it stays in the landscape. And I think that allows the building of long-term solutions that will protect the biodiversity and community. And I knew you'd support that one. So we've just produced a report called the 4 Returns Framework with Common Land and Wetlands International. I just put the link in the chat box, because we need a system that will work for forests, for water, for agriculture, for coral reefs. And you'll see some examples for coral reefs there. And I think we're getting that with a simple methodology for building landscape programs that involves 5 steps, and which anyone, any actor in the landscape can move forward with. So that's the beginning point. But absolutely, as Walter says, there's a need for early capital to cover the costs of project design. We're finding that's the hardest. The small money is the hardest money to find. The big money flows fairly quickly once you've done the work. And then de-risking instruments, guarantees and insurances and so on are really, so some exciting work coming down the pipeline for that. We're working with one of the world's largest insurance brokers who's developing parametric insurance for landscapes. And this is like health insurance, where smokers pay more for their health cover, their health insurance, than non-smokers. Well, why not the same for businesses and governments who have climate strategies and are implementing them? they pay less than the governments and businesses that don't have climate strategies. There's lots of exciting work ahead, I think.
Thank you, Paul. Pauliina, Alex, would you like to throw your sense here, maybe briefly, so we have time for maybe one more question, please.
So I would like to touch upon the social environmental standards. Definitely, those are very, very important when we talk about forestry projects, and those are important for also for the financiers, so that we basically have a standard and a certification in place, and we know exactly what is happening in our assets. Of course, these might not be sort of enough. Those are a very good starting point, and I think that in the future we're going to be seeing also new ways to value the biodiversity and increasingly look at those issues as well. And about your question of how to maximize these different returns, my expectation is that in the future, even though let's say the commercial project would not cover large areas, we're going to be looking at wider landscape areas, and hopefully we will have even better cooperation between different parties involving in the area, because we will need to start to look at wider areas, not only the area where, let's just say, our company is working, but its impacts on we already now look at the impacts, but we need to even more work with the other parties, whether it's about the risk, but it's most of it is about the development impacts in the particular area, and improving the local community livelihoods, conservation, of course the animals living in the areas, and so on. But basically even more cooperation between different parties.
Thank you, Pauliina. Alex, what do you think on this?
I'll be quick. I think that at least in the voluntary carbon market, there's a benefit in the fact that everything moves very quickly, innovation happens quickly, but oftentimes it leads to a lot of siloed efforts because of the competition. And I think that that's why it's more important than ever to support what everyone here on this panel is doing. And I specifically really like what has been a theme throughout this conversation, which is about thinking about these projects more holistically and from a landscape point of view, and how those impacts are actually seen on the ground, not just on the project site, but elsewhere. And I think that all of this comes down to, is very heavily dependent on the local communities around the project area and in the project area, because it's all driven by incentives, long-term incentives. That's ultimately what's going to lead to us to be able to make the most of this moment, where we're taking advantage of this gift of almost like hitting a reset on these project areas and the outside areas for land management, and allowing us to have a moment to reset and plan differently, to be more sustainable in how we manage this land. So it's important now that we don't just think of these projects in their 30-year lifespan, and we look, or 40-year lifespan, or whatever it is, look at them more holistically. And I think that that's where the most social and environmental impact is going to be seen. So,
Thank you, Alex. We have only a couple of minutes left, but I want to throw in one last question, just pick your brains on this. And it's also been posted in the chat. It operates at two levels. First one, compared to other green investments, we're thinking of energy, transport, infrastructure. Forest investments are really marginal. We see this when we look at climate finance, when we look at green bonds. And the second related question is also how to reach, the local level, the small producers. I mean, we have these big pledges that moved on from talking about millions, then we talked about billions, then we start talking about trillions. But in the end, what actually goes to the field, to the ground, is very, very little. Any words of wisdom, maybe 30 seconds, each of you could say, in your experience, what could help that? Because obviously maximizing social returns, environmental returns at the local level, these are very related and very important in the tropics. Who would like to start with this? 30 seconds, please.
Alex,
I was just going to say that, yeah, like I said, I think that it's really important for us to think about these projects beyond their lifetime. And I also think that it's important for us to think about equity in a project. So thinking about a project beyond just like how we think of it that has an end date to it, but also something that's sustained for forever, the hope is, and therefore thinking about the structure of equity for the people on the ground, and not just in a project that has an end lifetime, but a project that's not seen as a project anymore, that's an actual change in land management. Having equity in something like that for people on the ground is, I think, something that we need to think about, because so much of those returns are seen outside of the project area, and that's just not fair and not going to be a solution in the long run.
Thank you, Alex. Sorry, I'm going to cut you so that we have a few seconds for the other one. Paul, you want to say something?
Yeah, sure. If you're a forester, where are the business opportunities? There's some in forestry itself, but the big ones are linking with other industry. So, working with the agriculture industry or with the water industry to help supply water or help protect crop water flows and so on. We're working with the Irish government to set up a peatland fund, and that requires removing some forests and planting more, and it'll be quite large. So think outside your box, and for investors, I think that mixing of different products and projects in a landscape gives more diversity, but it also creates synergies that can create much more investable projects. We're starting to see this. It's new, but you'll see much more of it down the line. Thanks, Marco.
Thank you. Pauliina, you want to share your views?
Yeah, it will be interesting to see how the sort of a landscape approach, how it will develop in the future. And I think that all of the investors, we sort of have our own mandate, or we have the the scale what we can do. And I think that it is important to look at that all of the projects would have financing available, and basically just to see if these, for example, the smaller projects, could those be combined and with the other projects, and look from the landscape perspective, or would there be other initiatives which could be helping those projects, because sort of a big financiers, it's just directly impossible for them, but sort of potentially create new initiatives and start to look more from the landscape perspective.
Thank you, Pauliina. Walter, you're the last. We are a little bit over time, so quick, 30 seconds. What do you think?
Well, I'll try to answer some of your question, but some of the questions in the chat. And the answer in 10 seconds is it can be done. You can associate small landholders, and there are common banner and develop solutions that benefit the small landholders and the investors. And don't take my word for it. I put in the chat the Initiative 2020 list of projects. You'll find there a number of activities that show that this is possible. One example, just one example, the Macaúba project in Brazil, which is a native palm that, if successful at scale, has the potential to displace African palm. And African palm is one of the key drivers for deforestation in the neotropics. Macaúba, in small landholder arrangements, organized under a neat governance structure, is providing local smallholder returns and also the return to the capital for the investor, which in this case is Mirova Natural, which is one of the largest investors associated with a German company called Inox. Other examples I've posted in the chat.
Well, thank you very much. Not enough time to really cover these big topics and so much experience in this panel. I want to thank all of the panelists for sharing their experiences, their links, their tips, and also thank all the participants who have joined us, and of course the organizers here, Haley and Warren, have helped us put this together and have such an interesting conversation. Thank you very much.